I typically say I help with fraud prevention as relates to online transaction. It's a very niche, I think, industry. I think a lot of merchants, even merchants starting to want to sell something online, have no idea of this fraud and first-party fraud and chargebacks and the risks and the challenges related to it. So unfortunately, in the online payment industry, once you do get all those chargebacks and the acquirer contacts you, at that point, it's a little bit too late.
Welcome to Let's Talk Payments, the podcast where we invite experts from our payment industry, interviewing about a specific topic. Today we have Bart Cipkowski, Chief Revenue Officer from ChargebackHelp, and we're going to talk about chargeback prevention. We're here in Rome, beautiful Rome today, joining the MasterCard event. Thank you for being here with us. Talking about the chargeback, have you ever done a chargeback yourself personally?
I have, yeah. I've had a couple of examples. Now I'm a little bit on a situation where I understand that ecosystem, so I was able to use it to my advantage. But I have had a scenario once where I bought something online, and unfortunately, the item came and wasn't as it was described. It was a little bit broken, let's call it, and I tried to contact the merchant. They wouldn't reach back out to me, so in the end, I ended up calling the bank. Now, luckily in that case, I know you mentioned MasterCard, but this was on an Amex, and I must say the service was amazing. So it was very, very easy to get my money back from them.
That's great. We work in payments. How do you at a party explain to friends what you're doing?
Oh gosh, at a party, try explaining it to my grandmother or someone at home, right? So I typically say I help with fraud prevention as relates to online transactions. And I think that's as simple as we can make it, because it's a very niche, I think, industry. I think a lot of merchants, even merchants starting to want to sell something online, have no idea of this fraud and first-party fraud and chargebacks and the risks and the challenges related to it. So.
And I guess those people at the party make a lot of misassumptions, and you just answer,
Yeah, and I think what happens a lot of the times is those little things and those little misassumptions can actually put a black spot on you for life, and you may not realize the consequences and the impacts later, right? And certain cases, extreme cases, could even stop you from ever being able to process transactions online. So
True. How long have you been in payments?
gosh, well, this is one of the only times I would say I'm starting to date myself a little bit, because I always felt like the young one in the industry, but I guess not anymore. I've been in payments since about 2010, so it's almost 15 years now. So it's a couple of years.
And what company did you start?
My first payments role was for Authorize.net. I was the first employee when they moved out of the North Americas into Europe. I've worked with them through the acquisition of CyberSource and Visa for a couple of years. Then I had the opportunity to shift over and work for Ethica for about 10 years, managing the global reseller, or the Europe, Middle East, and Africa reseller channels for Ethica. And then a couple of years after that, through its acquisition of MasterCard. And now I've been Chief Revenue Officer for ChargebackHelp for 3 years.
It's a great career path.
Yeah, sure.
So we're talking about chargebacks today. How does a chargeback look like? What is the process of a chargeback? Who are the stakeholders involved?
Sure. So a chargeback at its core, it's really a dispute mechanism that protects the cardholder and gives them the ability to claim money back when they didn't receive their item, or maybe the item came broken, or it wasn't as it was described, right? So in terms of the parties involved, so imagine a cardholder going online to, let's pick on a global retailer. They go online to buy something from, I'm going to use the word Amazon, but just let's use that as a high level. They go online, they buy something, and let's say the item never comes in, right? So the transaction flow itself was the cardholder used their card on the merchant's website. The card details were transmitted through the merchant's technical solution, typically a payment gateway that was routed to an acquiring bank, a merchant account, that then transmitted those transactional details to the card issuing bank, so the bank that gave the cardholder their card, checked whether there's sufficient funds on the bank account, transmitted the information back through the payment flow to the merchant, advising them, yes, there is money, or no, there isn't, and blocked those funds on the cardholder's account. So when it comes to a dispute, like you asked, it's very similar. It's the other way around, right? So it's the backward process. So now a cardholder is trying to contact the merchant saying, hey, I'd like my money back. I didn't receive the item or it was broken. And in this scenario, let's say the merchant was non-responsive or not willing to help. So the cardholder would go to their card issuing bank, which is typically the easiest way, the easiest route for them to contact. They would say, hey, this specific transaction I had a problem with. They'd have a conversation with the bank as to, well, what's the problem? And there's typically two categories of problems. There is a fraud related problem, or there is a customer complaint related problem, right? Fraud would be where the cardholder says, I actually didn't authorize this transaction. Someone got a hold of my card details, or someone charged my card without my permission, right? And then the non-fraud is, yes, I did make the transaction, but there's something wrong with this transaction. So through the chargeback process, what would happen is the cardholder would have that conversation with the issuer. The card issuing bank would ask them all the necessary questions, would then proceed with disputing that transaction through the card schemes, Visa, MasterCard, American Express, over to the acquiring bank. And then the acquiring bank would present what's called a chargeback, but effectively it's a dispute on a specific transaction to the merchant, with the merchant having a couple of options at that point. Option one is just agreeing that they are in the wrong and giving the money back to the cardholder, or attempting what's commonly known as a representment, which means collecting the compelling evidence data, things like the receipt, any shipment information, tracking information to prove that they actually did deliver the service as described, and passing it back through the flow to attempt to win the case. So you can think about it as a court case, right? There's two parties, one's filing a claim, and we're trying to see which one wins and who's in the right.
So continuing with that court case comparison, is there also a judge?
Yes, there is a judge, and today it's those card schemes, right? So that's part of the beauty and the positioning of the card schemes. So Visa, MasterCard, American Express, Discover, right? They've positioned themselves, they created these rails for the customer to purchase things from the merchant in a quick, secure, and reliable manner. So in the same way, they have to create some sort of a dispute mechanism, right? Allowing the cardholder to dispute something if the product doesn't come. So going back to your question in terms of who is the judge per se, in these situations, if the parties can't decide themselves between the card issuing bank and the merchant's acquiring bank and decide on an outcome, then at the end of the day, the last step is where Visa or MasterCard would step in and they would decide who is the winning party.
Yeah. Does that happen often? Did they decide?
Typically not too often. So in the typical manner of things, card schemes charge for this whole process, right? And the longer the conversation goes on, the more expensive it gets. So typically in most situations, in my experience, the dispute is resolved within the first or second communication flow. So you'd have the first chargeback coming in, and typically the merchant would accept that, or maybe they would represent it back and send information. But if they do send information back and the issuer rejects that information, it's very unlikely that the merchant would proceed forward. The fees can get pretty expensive. If you get to that arbitration phase, which is that next phase after the representment, it can be as much as $500 or more dollars for that one single case to the losing party. So if a transaction is for $20, $30, or even $100, that gets way too expensive to risk it.
Yeah. How big is this problem of chargebacks in the industry?
Well, it's always a percentage of the overall volume of transactions, right? So as transactions increase globally, and I think some of the recent history, things like COVID, have taught us that people are making more transactions online. We're in a convenience age where I want to buy something, I want to now.
Yeah.
So I'm going to look on the phone. I'm not going to go to a shop, right? So we're moving more of our overall transaction volume into online transaction. And as we do that, naturally, the percentage of disputes is going to grow as well, because there's going to be some unhappy customers. Whether they're right or wrong, they're going to be unhappy, right? So they're going to come back. So in terms of sharing a little bit of stats with you, we've looked at a few different sources like Ethica, Sift, kind of reliable sources that share some of these data points. And what we're seeing is there is a projection that by 2026, the global chargeback volume should hit over $337 million. And just in terms of positioning that, because we share these big numbers, what does that mean, right? So positioning that in the last 3 years, so from 2023 to 2026, that's a 42% growth. So that growth curve is moving up significantly.
Wow. And any idea how many of those transactions result in the chargeback?
Well, so what we're talking about here is specifically chargeback volumes, right? So all of those result in a chargeback. I think the question that we should ask ourselves is how many of those are valid chargebacks. And that's where we kind of spin around full circle. And that's an interesting statistic to kind of look at, right? So at the same time where unfortunately there are merchants and there are situations where maybe items don't get shipped or services undelivered, there are situations where a cardholder purchases something, receives the service, but unfortunately decides to try to gain the system and take advantage of the merchant, right? And see if they can get their money back. Whether it's someone maybe, gambling some money away and feeling bad about it and trying to claim, what do I do now? Or maybe it's my, son, daughter buying something online with my Apple ID and me not realizing it. So I'm calling my bank, filing a dispute, a chargeback, but it was actually a legitimate transaction. I just wasn't aware of it, right? So I think that's where we start getting into very interesting statistics and maybe I would say a little bit scary statistics. So according to Ethica's analysis, what we find, what they have found when they spoke to some of the biggest digital goods merchants in the world is that around or up to 75% of all fraud-related disputes globally can be considered what's called first-party or friendly fraud, which means that they were legitimate transactions, but the cardholders claiming they were not, right? So this is what we would consider cardholder fraud.
Yeah.
There are legitimate cases and illegitimate or malicious and non-malicious. So cases like I just described where, there was no intention, no ill intention on the cardholder's side. They just didn't know. But there are also those specific cases where the cardholder is trying to defraud the merchant and game the system.
And I guess that's very difficult to predict upfront at the moment the transaction is processed.
I'm going to make a bit of a claim. I know I've heard a few people in the industry that throughout the years that they've been able to crack the code and try to figure it out, but it is my belief that it is impossible to predict first-party fraud beforehand. The only opportunity may be cardholder behavior if he's done it before and you've caught him. But outside of that, I think it's impossible because it is actually a legitimate transaction.
Yeah.
It is the cardholder with their IP address, with their device ID, going to a website, making a purchase, receiving that purchase, and then saying they didn't, right? So all of the typical fraud prevention systems would fail in that case because it was actually you, David, making that purchase.
Yeah. So as a merchant, if you would like to fight that problem, the only way doing that is scrutinizing your transactions much more, declining much more transactions upfront.
Yeah, but I think you'd be doing this based on false data as well,
Yeah.
because again, it is you, David, going on the website making that transaction, right? So how would you decline a transaction assuming it's first-party fraud? I mean, the only opportunity is maybe a network-based effect where I've done this myself with merchant one and merchant two knowing that I'm a potential risk because I've done it before.
Yeah.
So some sort of a network sharing effect or a previous history with that specific merchant that would lead me to believe, right? I'll do it again.
How do you look at the role of issuers there?
Well, I think that's where the gap is. It's interesting. Like through my career, I've had these opportunities. I'm going to call out Ethica here. One of these beauties of what Ethica and Verify created in the ecosystem is they have spotted this issue of first-party fraud and so forth, and they've looked at, okay, so what is the root cause? And what they've determined over time, again, that's my perception of it, is that there was a lack of communication between the merchant and the card issuing bank. So, which meant that the information the merchant has doesn't get to the issuer. So when I, as a cardholder, call my bank and tell them something about a transaction or ask them something, the card issuing bank actually doesn't have much information to go back on and explain to the cardholder, well, this is what it was. Or, you see on the billing statement, online transaction, the billing descriptor itself, okay, because maybe someone didn't set it up properly or said something wrong in that field. But actually, here's what it was. Here's the receipt, right? The merchant has all this information. So what these two companies have created over time is they've effectively created a network. They've almost replicated what Visa and MasterCard have done years and years ago, create a network by connecting the merchant directly to the issuer and facilitating the issuer to actually get access to this data. Because I think you've asked what is the role of the issuer. The role of the issuer typically is the first point of contact. I know for me, I have a few cards in my wallet, and I am much more comfortable contacting my bank than I'm comfortable contacting some merchant that I've made a transaction on their website for the first time. Because there's a level of trust there already, right? So I'm assuming if I contact my bank, they would have no reason to try to scam me or try to defraud me or whatever it is. And it's also easy. I have my app, I open it, I call them and so forth, right? Now, if they don't have much information and I'm telling them it wasn't me, then and they're saying, okay, yeah, then we'll file a dispute. Then that leads me to believe, okay, so maybe it is fraud. That there's already a consumer behavior, I think, that's being drafted here. But if the issuer right there and then in real time can come back and say, hey, well, actually, hold on a second. I'm connected to this merchant. Here's the email you received with the receipt, right? It was a hotel room in this and this city, right? And you got charged $500, but X percentage of that was taxes, and it was for 3 nights and so forth. It was that trip. So why did I see on my bank statement, PayPal as a payment method? Because you probably process it through PayPal, but right. So I think that's the thing that's missing, and that's the role of issuers. But we can't blame the issuers. They just don't have access to the data. And I think that's what the industry is trying to solve.
So since the introduction of those networks by Verify and Ethoca, has the problem of friendly fraud, first-party fraud, decreased over time?
Well, that's an interesting question. And I think, has it decreased? I would say proportionally a little bit, yes. However, because of the massive growth we're seeing in online transactions overall, it seems like the problem is growing, right? So when you look at the ratio likely is a little bit lower, and especially on the merchants that are actually leveraging the tools and the network to its full potential. But when you look at it at a global industry level, I don't think those solutions yet have the penetration to really change the global statistics, right? On the flip side, I think what's interesting is companies like Ethica, like Sift Science, and so forth have done some analysis. And they've actually reached out to consumers to try to see how often the consumers, participate in first-party fraud, right? And it's interesting because from what we've seen that they have seen that 1 in 4 consumers will actually admit to having performed a first-party fraud transaction, right? Why did they do that, right? Because they were educated, maybe because of competition on the issuer side, that they have this protection. Or maybe that later on they learned that's what it was and they came back, right? But it's interesting that that's a pretty high ratio. That's 25%, right? So it is a real problem. It's a big problem in the industry. And I think especially lately, we have things like Vamp around the corner, right? Things where the card schemes are really starting to scrutinize on merchant behavior and cardholder friction. And I would urge the ecosystem to remember that while that's very important indeed, and it's important that the merchants make a very clear experience for the merchant, for the cardholder in explaining the transaction process, it's also very important for the ecosystem to create solutions, to share more data, and to stop cardholder abuse. I think it's a 50-50. We can't just focus negatively on one side of the ecosystem.
No. What is the problem for a merchant when a chargeback occurs? Obviously, the potential loss of the transaction related to the product he shipped or service he provided, but what else?
Yeah, so I think there's a few things, and I think some are a little bit less obvious than others, right? So you're getting a chargeback as a merchant. What does that mean? Well, it means you are notified typically 4 to 5 to 6 weeks after the transaction took place. So there is a big time gap, right? A month and a half has passed from the transaction taking place, and you're notified, hey, there is a dispute. You can try to fight it, or you can give the money back. So first of all, there is a fee associated to that chargeback. So I, as a merchant, am now facing a chargeback fee that I have to pay for, right? That can range anywhere. I mean, anywhere from $10 to even $30, right? For the merchant at the end of the day. So that's one aspect. There's a fee. Another aspect is if I don't have sufficient compelling evidence to actually fight the case, proof that I've delivered the good and so forth, then I most likely will have to refund. So not only is it the fee, but let's say it was a $100 transaction and I've provided the service or sent the item, I now have to refund that $100, but I'm out of service or out of item. So I've actually lost money twice there, right? So that's another aspect. The card schemes, to try to reduce the cardholder friction, are also mandating a certain performance level on the acquiring banks, on the merchant account providers, which then in turn mandate that level of performance on the merchants. So if that level of performance increases too much, if I have too many chargebacks compared to the total number of transactions, I may face additional fines, or I may even risk losing my merchant account altogether.
Yeah.
And a lot of merchant account providers will actually ask you for processing history when they set up your merchant account. So if you have that blemish on you in the past, it might be very challenging for you to get a new bank to process in your behalf, right?
Yeah.
And I think one that's a little bit less obvious, but it's important to remember, is transactional acceptance. So card issuing banks, as well as merchants, will have pre-authorization fraud prevention solutions that will look at a bunch of data points when the authorization comes in, when a cardholder tries to make a transaction, and it will score a transaction and determine, should you process the transaction or should you not? What is the likelihood that this is fraud, that this is actual real fraud, right? And then the merchant will decide on the merchant side, do I want to take this transaction or not? But then when they decide they do, the card issuing bank will do the same, and they'll decide, do I want to decline this and tell the merchant, no, I'm declining it? Or do I want to actually allow the funds to be taken, right? Now, these systems are typically steered by the negative data. So by previous fraud, by previously done chargebacks on both sides, the merchant side, the issuer side. So we talked a little bit about first-party fraud, right? First-party fraud being masked or hidden as actual fraud. It's being flagged as actual fraud. So what a lot of the times will happen is when that chargeback is filed, and you, David, have filed it, and it's an actual transaction, you actually made it, now your device name, your IP address, your email address, your account history, and so forth, on the merchant side may be flagged as potential fraud or as fraud. So the next time you try to make a transaction with that merchant, you might be declined. If that fraud database or the system the merchant uses has some sort of a network effect across multiple merchants, you might experience a decline on another merchant, right? And then flip that around, your card issuing bank, so let's say your Barclays card that you used, they saw the same information on their side, and keep in mind that's a silo.
Yeah.
They see the negative data of there being a fraud on this specific card with these specific details. The next time merchant number 2 tries to process a transaction with you, they might decline that merchant's, or the next time that same merchant, tries to process a transaction with that issuer, but maybe for another cardholder. Maybe I'm going in with a Barclays card to that same merchant trying to make a transaction. Barclays might reject my transaction and decline it
Because of the past experience.
because of the past experience with you, right? And now that merchant's approval ratios are going down as a result of that, and they don't know why. They have no insight into the fraud prevention system on the issuer side, right? So there's actually tangible impacts. So to recap, chargeback ratios across my processing volume, chargeback fees, losses related to goods and items being shipped or services delivered, but also tangible authorization rates going down on both sides, the merchant side, but also on the card issuing side.
So it's very important for a merchant to do whatever they can to prevent a chargeback.
100%. And I want to just pull back a little bit. You asked me at a party, how do I explain what I do, right? I think if I'm a merchant and I want to go online, right? Let's say I've created a really cool brand of shoes and I'm selling it locally, and now I want to sell it online. The last thing I'm going to even consider and think about is chargebacks and fraud and first-party fraud. What are these things, right? And I think that's where it's our responsibility jointly as a payments ecosystem to not only educate the merchants as to the real risks related to fraud and first-party fraud and chargebacks, but to create off-the-shelf simple solutions whereby these merchants can not really have to educate themselves and become as boring as I have been for the last 15 years talking about fraud and chargebacks, right? But really to just pick up a solution and know that it's going to protect me from all of the risks that are out there and not have to worry about it.
Yeah. And you mentioned before that for a typical cardholder, it would be easier to go to their issuer rather than to the merchant. There's a level of trust with their issuer. So the first step for a merchant to prevent a chargeback is probably gaining that trust, helping the cardholder to actually come to them rather than to their issuer.
Mm-hmm.
How do you do that as a merchant?
Well, I think let's look at the transaction flow. So if I make a transaction with the with a merchant, the first thing I'm going to see is I'm probably going to see something on my bank statement, right? I'm going to see some sort of description. Hey, you just bought for $100 something here. And there's typically a piece of text next to that transaction that's commonly known as a billing descriptor that is somewhere around 5 to 15 characters long that'll define who I made that transaction with. Now, that's a piece of information that's defined at the mid-level, at the acquire level. However, when a transaction is processed, it's the acquiring bank or the merchant account provider that will process that information through its processor to the card schemes, through the issuer's processor to the issuer, to finally display it on the issuer's mobile banking app for online bank, right?
Yeah.
So there's a lot of entities that information gets processed in between. And guess what? They're not all aligned. Not all of them support the same length of characters. Not all of them support the same type of characters, special characters. We have different languages that will have different alphabet, right?
Yeah.
We have periods, dots, slashes. We have all sorts of things, right? So what a lot of times will happen is whatever the merchants define the billing descriptor as, assuming their acquiring bank actually put things in the right field, and from the start it's correct, that's not what you see on the bank statement. And you'll have things truncated, you'll have things removed, you'll have things altered, right? I've seen it, for example, many cases, the descriptor will have a main field that'll have a city field.
Yeah.
And sometimes the acquiring bank will flip them around and you'll have the city. And on the bank statement, you'll see Washington, D.C.
Yeah.
Okay, what is that?
No idea.
Right? No idea. So, which naturally can create first-party fraud. So going back to your question, I would say the first and foremost, the simplest thing that the merchant can do is simply make sure that they have set up that billing descriptor correctly and that it is correctly being displayed at the card issuing bank level, right? This can be done by talking to your PSP, talking to your acquirer to make sure it's set up correctly here, but also, looking on the bank statements themselves, maybe making a purchase on your own through your own store yourself personally and seeing what the information comes back as to see, is it actually what I expect it to be? And is it easy for the cardholder to know what it is, right? One of the most common things we would always recommend to merchants that we work with is to set the URL, the actual website where the purchase was made, as the billing descriptor.
Yeah.
Because that's the easiest way, right? If I see the URL, I'm going to copy paste it, I'm going to type it in. That's what it was, and maybe have a contact us page with a phone number or a chat and allow the cardholder to contact them.
Yeah. And you mentioned phone number chats, customer service, being reachable, I guess, is number 2.
Well, even having a contact us button, right? Let's start there, and having something on your website where, someone can be contacted relatively quickly and respond back and be able to resolve my query, right? A lot of times the queries are just questions or questions about a policy, or maybe I ordered the wrong color and I want something else, right? Or whatever it is. Merchants can typically resolve these without having to go to through the chargeback process and avoid that whole fees and ratios and all of those challenges, right? But if that's not available and I'm calling my bank's definitely not going to be able to resolve any of these. All they can do is file a chargeback.
Yeah. And what if, well, you mentioned the example with yourself before, you ordered something. What if merchants have difficulties in providing information about the whole tracking or about the whole shipment procedure of that product? I guess that also leads to consumers not knowing where their articles are. They have their expectations. There is delays, whatever. That probably also increases the likelihood they're going to file dispute.
Yeah, I'll mention this a little bit of a caveat, but my wife and I have been married for 15 years this year, and I would say thank you for surviving, I think is the case, right? So what I would say is the key to any relationship is communication, right? And at least that's my perception. So taking that example and moving it to this example of cardholder versus merchant, I think the key is communication to any relationship, right? So going back to this, how easy is it to know who I'm communicating with? That's where we talked about the descriptor. How easy is it to initiate that conversation? And how communicative, proactively is the merchant to me as a cardholder when I make a purchase to know about what did I buy, who did I buy it from, why did I do it, what is it, and what's happening with it, right? Sometimes we make a purchase for a holiday that's going to happen in 6 months because it's cheaper to do it now. and I may forget about it over the months, right? Or maybe there's some things that I change over the time and I forget about it. Again, sending an email with a receipt, right? Giving me updates on and reminders of, hey, do you remember you bought this? It's coming, right? Sometimes there's a long shipment time. Sometimes I'll sign up to a digital good, to an account, because right now I want to be able to log into Netflix and watch something because someone told me there's this really good TV show there. And I'll watch it once and I'll forget about it. And 6 months later, I see all these charges on my account. I'm going to call and say, crap, I just wanted to watch that one thing. I didn't want to be billed for 6 months, right? Again, if I'm getting constant communication from the merchant by emails and so forth, then I have an opportunity to trigger something in my mind and potentially just cancel the subscription if I'm unhappy with it or I don't want it anymore, instead of then clawing back all those chargebacks against the merchant.
What you basically say is stay connected.
Stay connected. Yeah. Explain what it was bought, stay connected. Absolutely. And share the information with the cardholder.
How important are terms and conditions, return policies, refund policies, and so on in this context?
Very important. And how often is it? So how often is it, David, that you get, you're signing up to something, you see, you have to click on I accept, right? And how often do you actually read the terms and conditions yourself? Never. Okay. See, so I think it's important from two perspectives. I think it's important from one, that there are these people who will read some of it and they'll be educated as to what is it that I'm actually getting into, right? I think the most important information should be not in some little link somewhere hidden away, but very clearly visible, right? I'm signing up to $30 per month. It's going to be $30 per month until you cancel it. The first month is for free, right? Because I'm giving you a trial or whatever it is. I'm buying a physical good that's going to get shipped in 30 days, right? Here's what I'm paying. Or maybe I'm making a booking and I'm putting a down payment of X and so forth. I think that information needs to be very clearly visible and not hidden away anywhere.
No.
However, it's also important to have proper privacy policies, terms and conditions, shipping policies, and refund policies that the cardholder actually has to take an action on, has to tick a box that they've read. Because when it comes back to those disputes and when it gets far enough along, and maybe it was a quite expensive product that was bought, or maybe the volume of a cheaper product is creating an expensive situation for the merchant, then I can go back and try to dispute it and say, no, I provided all of the refund policies. This was a ticket to a game. It's a one-time thing. I can't resell it anywhere else because the game took place already. It's gone, right? And there was a no refund policy on this. And the cardholder specifically ticked the box. They had the opportunity to read it or not. They said they agreed to it. And I'm definitely in the right here, right? So I think it's important from an educational perspective, but also important to protect your business later down the road.
Hey, and you mentioned before getting in touch with a merchant, asking questions, whatever. Does that also mean that you would advise merchants to think twice before they outsource their customer service?
Yeah, I think that's an interesting question. So, many businesses, typically a business will start with the product. That's typically when most businesses will start. And then they'll build an ecosystem around them, support ecosystem of what else do I need? I need this. I need a drop shipper. I need a customer service. I need a website. I need a payment gateway. I need an acquirer, right? And not every business is big enough or maybe has the resources or the expertise to build it in-house. So sometimes, yes, they would go. There are third-party companies that are great at it and maybe cheaper, expensive due to economies of scale that would allow the merchant to outsource. But I think it's an interesting point. I think it's very important that if we outsource any portion of our business, that we fully understand how that party operates, that they have a very good understanding of our business model and what it is we're selling and how we're performing, so that they're able to adequately support the customer and not result in unnecessary disputes later down the road.
Exactly. And probably also that as a merchant, you immediately are notified when certain events happen, when certain spikes are noticed and so on.
Yeah, and we spoke about, first-party fraud, and there definitely could be cases where someone's maliciously going to your website and trying to game your system and take products or services away from you and then continuously charge back and get the money back, right? It's important that you spot that as fast as possible to prevent that behavior, maybe block that account and prevent losses, right? But there's also actual real fraud out there. And I think the faster, you're able to capture those and you're able to feed that into any fraud prevention mechanism you have and mark it in your CRM, then the more losses you're able to prevent related to fraud down the road.
Yeah.
The speed of data is very, very important nowadays.
Some listeners or viewers might think I'm doing business in Europe, and in Europe there is a perfect regulation, PSD2. There's 3D Secure. I'm authenticating all my consumers. Even if there would be consumer claiming fraud, they cannot do a chargeback because I'm protected by 3D Secure. Do I still need to be concerned, or am I right of thinking that as a merchant?
I think anytime anyone uses the word perfect, I cringe a little bit. I don't think there is such a thing as perfect anywhere in this world. And what I would say is, yeah, absolutely, you should be concerned. So that's a common misconception though with 3DS. So let's take that as an example, right? So 3D Secure, what it does is adds an extra layer of authentication when a cardholder makes a transaction, which typically requires some sort of biometric input. For example, I'm making a transaction, I'm getting a notification in my online banking app. I have to scan my fingerprint or my face and say, yeah, it's really me. I really am making this transaction, right? So because of that second layer of authentication, what 3DS does is it removes the liability when it comes to fraud-related disputes only from the merchant. So the cardholder can no longer go to the issuer, and the cardholder can go to the issuer, but the issuer can no longer hold the merchant accountable through the means of a chargeback to say, hey, this cardholder is saying it wasn't them. That does not, very importantly, stop the cardholder from going to the issuer and saying it wasn't them. It was fraud, right? So what does that mean for me as a merchant? Well, it's a little bit of a common misconception, and sometimes there's a little bit of truth to it, that if I run 3D Secure, I don't need to care about fraud chargebacks because the issuer will take that liability off of me. I'm never going to get them as chargebacks. Couple of things I would say to this. Number one is 3D Secure, while it does remove and reduce fraud, it doesn't actually remove all of the fraud out of the ecosystem. Number one, there's still fraud. You're just not seeing it. If you're not seeing it as a merchant, you don't have that ability we just spoke about to update your fraud prevention systems to prevent the fraud from attacking your system again, happening again, right? Meanwhile, the issuer gets contacted by the cardholder. They get told about the fraud, and the issuer will be liable to give the money back to the cardholder from their own pocket. So what will happen? How does the issuer protect their business in this case?
Well, next time I'm not going to approve.
I'm not going to approve, right? And guess what? If a lot of these cases are happening against davidsboots.com, then David's Boots are going to get continuously declined by this issuer in the future because they're losing money on every transaction. It's not worth it for them, right? So again, goes back to transactional acceptance. So yes, these solutions help. Why do they help? Because they do help to remove some of the actual fraud out of the ecosystem by double authenticating that it is indeed the cardholder making the purchase. It does not remove first-party fraud from the ecosystem because it was always the cardholder making the purchase. And it certainly does not remove the friction out of the ecosystem for the merchant.
I see. Hey, and you mentioned before you advised merchants to make use of third-party products, helping them to protect their business. What products should I think of?
Yeah, so I think it's important. We spoke a little bit about what the merchant can do in-house, right? We spoke about descriptor cleansing, working with their acquiring bank. We talked about the customer service, about sharing the receipts, communication, and so forth, right? I think there's a lot of third-party tools and a lot of solutions that the merchant cannot do themselves, simply because it's not their business to be doing so, that they can onboard to try to further mitigate the risks related to fraud and chargebacks and lower the pain that's caused, right? So, working at ChargebackHelp, one of the things we do is we consolidate all of the different dispute prevention and chargeback management tools that are out there into one simple comprehensive platform. So I don't want to make it too much of a sales pitch, but maybe what I'll do is I'll talk through a little bit as to we categorize the different products, so there's tons of them out there, into three main categories. And let's talk through that, and maybe that'll help kind of position the different tools out there, right? So the first suite of solutions that we have, we call Deflect. And the idea behind Deflect is to deflect as many first-party fraud cases as possible before they even become disputes. So how do we do that, right? The cardholder is coming to the issuer. That's the first point of contact. And we spoke about it. The issuer does not have the data required to answer the cardholder's questions or to push back on the cardholder and say, hey, this was you, or have you talked to your wife or daughter? Maybe they made the transaction, right? So the solutions within Deflect, those are solutions like Order Insight from Verify, Consumer Clarity from Ethica, Compelling Evidence 3.0 from Verify Visa, First Party Trust from MasterCard, Ethica, right? So what these solutions do, they aim at the ability for the merchant to, in real time, when a request comes from a card issuing bank. So imagine a scenario, I'm on my phone talking to the issuer saying, I'm not recognizing this transaction. The issuer can in real time through these solutions request the merchant to share compelling evidence data or any data they have pertaining to a transaction to allow the issuer to have a more viable conversation with the cardholder as to who is the merchant, what was bought, who bought it, and so forth. So an issuer will send transactional details to the merchant. The merchant will identify that transaction within their CRM, will share back the full PDF digital receipt that they would have potentially emailed to the cardholder, will share back contact information, phone number, customer support, website, and so forth, and maybe any account usage information, previous account history information as to their interactions with that cardholder to the issuer. And the issuer will now be able to have a more educated conversation with the cardholder as to was it them, wasn't it them, and explain the transaction. Or if the cardholder is persistent that they didn't make the transaction, to push back on them and effectively educate them that if the merchant shares this information through the representment process after a chargeback is raised, there's a very high chance you're going to lose, which will mean fees. If I'm filing a fraud-related chargeback, I should, as an issuer, cancel the card, which means temporary loss of service to the cardholder as well, right? So it's not a very good experience. So probably not the best route to take. So those are solutions that we call Deflect. So we always try to, again, going back to that communication aspect, I think those solutions are very important to be able to get rid of as much as possible, maybe not as much the malicious first-party fraud, but the non-malicious stuff, the stuff where the cardholder is just not recognizing the transaction.
And those data points would be shared real time.
Those data points will be shared real time. So, regardless of how the cardholder reaches out to the issuer, whether it's through chat or through phone call or through the website or the mobile banking app, issuers will have direct integrations to those solutions. And they will be able to consume that data in real time. The SLA, so these solutions can only work through real-time integration to the merchant CRM. And the SLA is that the data is delivered in less than 3 seconds upon request, right? So it needs to be real-time because you're on the phone or you're on the chat and you need to get it immediately. So that's the first and the most beautiful, the cleaner, I would say, cleanest solution out there, right? To share that data, push the cardholder off the phone if they are indeed incorrect about filing the claim, right? The second phase is what we call resolve. So now a dispute is coming. We have shared the data. It wasn't enough. The consumer still wishes to continue to a chargeback to a dispute. So now these solutions are commonly known as alerting solutions or alerts. These are solutions like Ethica alerts or RDR or CDRN from Verify. And the key principle behind them is the card issuing bank has had a conversation with the cardholder. They've tried to educate him. They failed. And in this case, a chargeback is definitely coming. These could be real cases of fraud. These could be customer disputes, or could still be some cases of first-party fraud. But a chargeback is definitely coming. So these card issuing banks who are participating in these alerting networks will first send an alert to the merchant, advising them, hey, there is a dispute that's confirmed. There's no chargeback yet. Mr. Merchant, first of all, here's the data in real time. The data, the alerting data can be delivered in hours or in days from the authorization taking place instead of weeks or months later, like we spoke about. So maybe the merchant can still block the account, can cancel the flight, can cancel the hotel room, right? Cancel the shipment of the goods, sell it somewhere else. Simply refund, resolve the case, minimize the impact in terms of costs. No chargeback ratios are impacted, no chargeback fees to the merchant. The consumer is happy, the issuer is happy. It also didn't land on the pre-authorization tools on the issuer side. So acceptance should not be impacted in this case for the merchant as well. I've resolved the case, I've refunded, I'm done, right? If it's a case of a fraud-related dispute, maybe I actually on the merchant side want to add the account, block the account, or add the email address or something to my blacklist and say, hey, I probably don't want to take any more transactions from that consumer because maybe the card's compromised or maybe that account is compromised, right? So it's that ability to prevent losses related to shipment of goods and delivery of services, but also prevent the chargeback and the negative consequences themselves. And then the last layer of the defense we call recover, and the idea is to try to recover the funds related to chargebacks. And that's where the Deflect solution didn't work. I tried to share the data, wasn't enough. The Resolve solution didn't work. I got the alert and I decided to allow the chargeback to continue through. And now I'm trying to fight the chargeback case by presenting a compelling case through the data that I've collected, through those terms and conditions that the cardholders ticked and things that they have agreed to, maybe a no refund policy and so forth, present it to the issuer and attempt to fight the case for me not to have to give the money back because I've actually incurred losses and I have delivered the product. So that's the solution that we have at ChargebackHelp, and that's the way we kind of split it up. There's all sorts of little solutions that fall into each one of these segments.
And what should I do as a merchant to use those services? Does it require a lot of integrations? Is it expensive?
So all of these solutions, at least on our side, are a per-use solution, which means that you're not incurring heavy monthly fees or integration fees. We take a majority of any integrations on us. I would also be keen to say that, it's not for every merchant to use all of those solutions. Depending on your size, on your vertical, you might benefit the most from one or two of these solutions and maybe not all of them, right? Which is, it's nice for us to have that a la carte menu and pick and choose the options you want, pick and choose the modules you would like that bring you the most value, enable them, disable them as you choose. The most commonly and where I would typically recommend most merchants to start would be what we call that Resolve module or that alert, those alerts, because it is a very simple service to get up and running. There's no integrations necessary at all. We can take all of the actions pertaining to when you receive an alert, looking for the corresponding transaction and refunding, not refunding on us, meaning it's completely hands-off for the merchants. We have hundreds of integrations to payment gateways and CRMs where we can automate those actions. So it's literally one of those services we can get up and running within a day or a couple of days of sign up. At the same time, if you have no disputes, amazing.
Yeah.
So if you're a merchant that's just starting out and maybe you've never had a chargeback and you're hearing about this and you're a little bit worried, signing up to alerts will cost you nothing unless you do actually start getting disputes, right?
Yeah.
So if there's no disputes, there's no alerts, you're paying nothing for the service. If alerts start coming and they're tangibly saving you money by preventing those chargebacks,
You're at least prepared.
exactly, right? Then you have the opportunity you're reaping value from them, then you're paying for the service as well. So I think that's where I would typically recommend for most merchants to start. Then if you do incur a significant number of first-party fraud, friendly fraud, and especially if you're one of those merchants that does collect a lot of data on your cardholders, physical goods, you actually have tracking information, shipment information, maybe services such as flights, airlines, hotels, and so forth. You do have, or you know what, we've even worked with companies like Forex and crypto who collect extensive KYC information, know your customer information on the sign-up page, and know exactly who's making the transaction, right?
Yeah.
So if you are that type of a merchant, it could be very advantageous for you to integrate your CRM and share that with the issuer to deflect a lot of these cases.
Yeah. How do you look into the future when it comes to chargebacks? Are we going to crack it or will it remain an industry problem?
I think many have tried to crack it, right? I think the chargeback mechanism was invented really by the card schemes when they launched their online payments,
Yeah.
or even card present payments when they launched the card present payments. When I was going to buy a television set, and maybe I had to wait 6 months by the time the guy actually made the television, didn't go broke, someone didn't shoot him in the Wild West, right? And he actually delivered it. So I needed some way to feel that it's safer for me to pay with this piece of plastic than it is to go and give my cash.
Yeah.
And that was the way that the card schemes converted, I would say, consumers to use cards and put their money in a bank than by using cash. It was to create a safe ecosystem and a convenient ecosystem. So is it going away? Well, there's not been that much development in the chargeback space since. We still have the same scenario where a cardholder files a complaint and weeks later, the merchant learns about it and so forth, right? There's, I think, innovative companies like Ethica and Verify that created these networks that try to expedite and clean up that process. I think these Deflect solutions like Order Insight, Consumer Clarity are really, really the future. Because if consumers could communicate in real time with issuers and issuers would have real-time data to the merchant CRM, I think there would be a lot less of these questions and queries. A lot of them would be resolved at point of contact. So I think we're moving slowly to a more automated, more advanced, more collaborative ecosystem, but it's taking time. This is years old.
So is that a matter of more merchants and more issuers being enrolled in that network?
Yeah, it's a bit of a chicken and egg, right? Majority of the merchants we speak to will say, well, which issuers do you have live? How much impact is it going to bring to me?
Yeah.
When you go to an issuer, they'll say, well, which merchants do you have? How much impact is it going to bring to me, right? A lot of these banks and a lot of these big merchants have had systems they built in-house or adopted externally over years.
Yeah.
And it's very difficult for them to adopt something, right? So it's taking a little while to scale. What we try to do is we try to have a lot of these pre-integrations to some of the biggest solutions. CRM solutions, gateways, and so forth out there to try to reduce the pain for someone to get started. However, that doesn't always work, right? Sometimes it's an in-house solution that still requires a connection. So it is going to take a little bit of time. At the same time, I would say fraudsters don't sleep, right? So they're also creating more innovative ways to defraud the ecosystem and try to gain advantage. So I don't believe this will ever get fully fixed, or at least not in my lifetime. But I do think that the ecosystem is definitely moving, spotting trends and moving in the right direction to create solutions.
Am I right in saying that this is the downside of something we need to have to hold trust in this whole scheme without chargeback or without the possibility to do a chargeback? The trust in the credit card transaction would probably be much less from a consumer's perspective.
Yeah, I think I wouldn't say this is necessarily a flaw, but I think this is the way the network was designed. It was first in terms of card payments, the idea first was to convince consumers to use the cards.
Yeah.
Right? If I have cardholder trust and the consumer wants to pay with a card, then it is likely that the merchant will have a necessity to adopt card payments because the consumer wants to pay with a card. And if my competitor offers card payments and I don't, and consumer wants to pay with a card, then my consumer is going to go to my competitor and not me, right? I know I do this myself. I will refuse. So I live in Poland, and Poland has a card adoption is very high now, but there's still a decent amount of merchants that will want to get paid by bank transfer.
Yeah.
And I personally, just with my payments experience, I will refuse to pay by bank transfer because I know that I, as a consumer, have very limited, if no, recourse in case something goes wrong. If I don't get my item, I can contact the bank, but chances are very, very small. Meanwhile, the example we shared, I pay with a card. If something goes wrong, I can contact the bank and file a chargeback, right? So it's always been, I believe strongly that the card ecosystem has always been heavily swayed towards the consumer over the merchant, simply because that's the way to grow their business, right? Now, that said, we should not be promoting fraud in the ecosystem. And I think as we become more and more educated and as the ecosystem becomes more and more competitive, we have card issuing banks who are actively advertising the security of payments and advertising on television the ability for a consumer to file a chargeback if something goes wrong. And it's becoming so easy in certain cases where you literally have a button to file a chargeback, where if I see an opportunity as a consumer, I may start abusing that. And I think we really need to start looking at the other side as well and protecting the merchant from cardholder abuse at the same time. So there are a lot of really good solutions that are coming out there, but we still need adoption I think. And we still need some more help with promoting these solutions, I think, from a card scheme perspective. I know they're certainly focused, but I feel like their focus is very heavy on the cardholder friction side.
Yeah.
And maybe sometimes neglecting a little bit the amuse side.
Yeah. I found it very interesting to speak with you today, Bart. Anything a merchant should, or any viewer or listener should absolutely not forget?
Well, I'm glad you found it interesting. You didn't fall asleep, so that's
Oh.
great, because I'm one of the few people, you're maybe another one that can talk about chargebacks for a little while and not fall asleep. So that's good. In terms of what we shouldn't forget, I think collaboration. So clarity of communication, number one, what we spoke about, making sure that through the transaction process, you make it very, very clear to the issuer, to the consumer, what is it that's being bought, deliver all the right information, continuous communication, and the ability for the consumer to contact me. I think that's step number one, just making it as clear as possible and as collaborative of an environment as possible. That'll remove a lot of the non-malicious first-party fraud out of the ecosystem. Secondly, leverage those third-party tools. There's no one golden bullet, no matter how much some salesperson tries to tell you that, right? There's a suite of different solutions for different types of problems. Look for these platforms that orchestrate or connect all of the different solutions in one place that can help you, consult with you, and educate you on the right tools to use. And there's definitely very good tools out there that can protect your business. Certainly don't try to rely on yourself. And the last thing I would say, don't wait till it's too late. Unfortunately, in the online payment industry, once you do get all those chargebacks and the acquirer contacts you, at that point, it's a little bit too late. So I would very strongly advise any merchant out there to proactively look at their fraud prevention, dispute mechanisms, and first-party fraud solutions before you have a problem. Exactly.
Yeah. Well, thank you, Bart. And thank you for listening and looking at us today. My name is David from eFlow. We help merchants finding payment accounts. If you found it interesting or you want to reach out, feel free to contact us on eflow.com, and see you next time. Thank you.